Europe is facing a wave of bankruptcies with the rate of firms going under likened to a tsunami by a leading economic watchdog. The European Systemic Risk Board, ESRB, has delivered a damning assessment of the economic crisis in Europe as much of the continent continues to battle a third wave of coronavirus infections. The finance body, chaired by European Central Bank President Christine Lagarde, warned firms may struggle to stay afloat as they continue to rely on emergency life support funding from the state. Thousands of businesses across the Eurozone, including in France and Germany, remain closed due to strict lockdown rules. The latest report by the ESRB said, in a worst-case scenario, the postponed insolvencies would suddenly materialize and trigger a recessionary dynamic, potentially causing further insolvencies. The current low rate of insolvencies would then be similar to the sea retreating before a tsunami. The ESRB warned when the economy eventually reopens and financial support is scaled back, the number of insolvencies in Europe could increase by around a third. Economists noted the number of bankruptcies fell by almost 20% between July and September in 2020, compared with before the COVID-19 crisis. Central and Eastern Europe is predicted to see even more firms struggle to survive with a 34% increase in those regions. The EU finance watchdog has made a series of recommendations to try and stem the exodus of businesses going under and the widespread job losses that it will entail. The financial body has also encouraged EU leaders to use efficient insolvency procedures to avoid a rise in so-called zombie firms. The ESRB acknowledged some EU member states may struggle to turn the tide for its businesses and warned the fallout could cause political and economic instability for the entire bloc. The report added, if rising insolvencies undermine the capacity of some member states to recover from the COVID-19 shock and lead to a deterioration in the asset quality of the country's banking sectors, it may result in political and economic instability which could spill over to the rest of the European Union. Germany is the largest economy in the Eurozone and a survey found consumer confidence has fallen sharply amid the ongoing restrictions. Angela Merkel has imposed tough measures across the whole country, with the highest infected areas under a curfew from 10 p.m. to 5 a.m. Finance Minister Olaf Scholz and Economy Minister Peter Altmaier have both said existing restrictions are set to remain in place until at least the end of May. The GfK Research Institute said its consumer sentiment index, based on a survey of around 2,000 Germans, fell to -8.8 points from a revised -6.1 in April.